the markets seem to have slowed down once again. So now with a period of sideways market for at least a few days, the RSI goes down a little and then we prepare ourselves for the next jump up. Today is a very good day for me to teach you how I'm able to make consistent income out of spreads. I made the video about spreads 2 or 3 videos ago, but now we're going to get very in detail on spreads, why I choose one over the other. I'm going to show you my history here and show you how you can simplify your life with AI if you have access to it. So let's jump right into it. First of all, welcome back to BitTopics. Glad to have you here. We are coasting for Bitcoin and Ethereum. Bitcoin at $104,028, Ethereum $2,615. We have XRP at $259. We have Solana at $180 and BNB at $656. So how have I been able to make consistent income out of these spreads? And how currently I'm projecting to make over 230% ROI per year, meaning that you're gonna more than double whatever you put in with this strategy. It seems crazy, but if you are part of the topics and you follow us, you know that the copy trading, we can see it right now by clicking right here, our current returns is 87% in 1 year. So actually less than 1 year, because we are 10 days away from completing 1 year of the strategy. In 10 days, we've made 87%. So in less than 1 year, we've made 87%, and our projection is to make 90% with the copy trading strategy. But how am I making more than a copy trading strategy? I'm gonna show that to you today. So if you don't want to learn trading, if you don't want to get your hands dirty into opening the trades yourself, well, the copy trading is here for you, because you're not going to find any place where you can find a USDC or USDT strategy like this with these returns, because this is not yield. This is not passive income. This is active income. There's a trader behind our copy trading strategy. This is why it's called copy trading strategy. But what if you want to be the trader? What if you don't want to rely on anyone but yourself? So here is all the tools that you need to have to make a lot of money right here. So where am I getting this over 200% returns from? So by using a dandy calculator, this is a daily compound calculator, we can add right here, for example, $10,000, and the average return that I'm looking for is around 0.34% on a daily basis. Of course, this is an average. We can be maybe 0.5, we can be maybe 0.2, maybe 0.18, doesn't matter. This is the average. So with this average for a whole year, and this including weekends, so Saturday and Sunday, you're also going to be trading, because it is really easy. Once you get the gist of it, it's really easy to do so. So by clicking on calculate, you can see that the total ROI, so how much I'm going to make out of the $10,000, is 245% after a whole year. So $24,517 in interest. If you scroll down, you have this very good breakdown you can do by day, by week, by month of the earnings month by month that you will have. And you can see the balance increasing and the total earnings so far. So of course, this is an average. An average is usually linear. It doesn't have ups and downs, and this is where things get wrong. But the average gives you a north. It gives you a direction where you can follow, but remember that is not going to be one-to-one. You have ups and downs in your journey. Even in the copy trading itself, you see we have ups and downs. We've had days of losing and we've had days of winning. So remember that when you jump into this. So now for the good part, let me show you visually my strategy. You can see these white lines below the prices of Ethereum. We are on Ethereum on the 1 hour chart. What are you looking at specifically? These are the strikes for the spreads that I'm opening. Actually, the strikes for the short leg, which is the closest leg to the asset itself, to Ethereum, the actual price. And what does it mean? It means since we're doing a put spread and a credit put spread, it means that we want the asset to stay above these lines. So in our case, we want Ethereum at all times to stay above the asset. Well, can it go down? Yes, it can. It can go down below this, but as long as by this part right here, it is above the strike, we have no issues. So it can go down right here in the middle. It can go way down, 50, 80%. As long as it goes up by the time it reaches this, actually a little bit early because we have settlements a little early than 8 a.m. UTC, but as long as a few hours before it is above the line, then we made money. We made the most profit. So you can see these past few days, this one was profitable, this one was profitable, this one was profitable. I actually did 2 in the same day, a little bit safer, and then I saw that the market was going to go up and I did another one, a little bit riskier, so more premium. This one was a Sunday. I was out with the family. I didn't trade this day, but then I did 0.2 on Monday. This was actually a 1.2%, and this was a 0.5%. So good returns right here. Yesterday's and today. So today I already opened one, and I'm going to show that to you in a little bit. So how do I choose these strikes? I choose by two parameters. First of all, the ROI. I'd like to stay between that 0.2 and 0.5% to an average of 0.34 return per day. And I usually look for indicators right here that we are in a good position. So for example, let me actually duplicate this. Look, right around here, we have a good support. And guess what? My strike is right at the support. So I know that worst case scenario that we go right here, we're gonna bounce back from this support. So I mark all points of interest. You can see below here, we have some points of interest, some support resistances. Here, I haven't marked any, but for example, this one is a very good one. So if I clone this again right here, or in this range, we could consider place of support, maybe not a strong one, but still a place of support. So I look for this and I look at the Bollingers. Usually when something goes outside of a Bollinger, it has the tendency to get inside. So for example, right here, what I could have done if I hadn't opened a position right here was to sell a call spread instead of a put spread. So imagine a line right here, and as long as Ethereum stays below, I would be profitable. So why would I do that? Well, because right here was super extended. So why haven't I done this? Is because we were in such a good momentum of an upward movement that I thought that for sure, if things were good enough, Ethereum could have kept going like it did right here, where it went outside, here it went outside, here it went outside. So this could have been also a huge movement. Then it was just say sideways for a few hours and then back up again. And I didn't want to bet on this. So what I did, I chose a very safe put right below that. It was around 6 to 7% away from the current price at that time. And you can see it did two, one very safe and one a little bit closer to get that extra premium. So this is how I do the visual part, but then I also go on the topics right here. I go to table and I see the quotes here for buys and puts. So this side is the call side of things. So since we're selling puts, we don't need to look at the call side. We need to look at the put side. So remember, when you have toggle sell, you see just the sell prices. If you toggle buy, you see margin leaves, and now you see different prices because these are the prices to buy puts. And if you toggle this, these are the prices to sell puts actually. So again, on the left side calls, on the right side puts, and then you can toggle if you want to sell or buy them. And a spread, you sell a put and you buy a put at a lower strike. So this is what we did. So actually this morning, I already opened one. You can see we have leaps right here that we bought in September last year. One of them is 100% in the green, and the other one, the Ethereum one, which was not doing very good, now is at 58% in the red, but most likely if Ethereum keeps going up, that one will make us some money as well. Nonetheless, we have to look at these two right here, the buy and the sell, because this is the spread that we just opened. And then you would say, Everton, how do I calculate how much that is going to make me? How do I calculate if that's profitable for me to open or not? A simple rule of thumb is that you're going to receive more than what you pay. So if you see right here, you receive $85 and you pay $51. So there's around 30 bucks, like 34 bucks of profit there. And then that profit, you're going to divide by the margin and then do the percentage. So multiply by 100 and you should get the ROI for that strategy. And guess what? If it is too complicated, you can just take a screenshot of this part right here, and then you can go on your GPT. For example, I trained a whole section of it to just give me a summary of each spread. And you can see I just pasted that image that we saw right now. And I said, run the numbers, please, because he's already trained. But if it was the first time for you, you would say, hey, calculate the spread, give me a summary. I want the two legs. I want the maximum profit, maximum loss, margin, ROI, all of these. You can ask him and provide more info if he needs to. And you can see right here that he gave me this. And then out of this, I create this image that you're seeing right now. So out of every position, I just feed it to GPT and then I export it. Then I create these cards right here that you were seeing for every single trade, and I just store them for later. AI is a very good tech to help you not to necessarily choose which option to go for, but to simplify your life, because we still don't have an advanced mode where you can track both positions at the same time, have a single P&L and all of that, break even. But we are working on that and we should have that up very soon. But you can still do it with GPT if you want to. So hopefully hopefully you're able to see the hidden gold mine that it is this strategy right here. A lot of people ask me, you just put $10,000 in the line and you're gonna make 40 bucks, 30 bucks. That doesn't make sense. Actually, if you look right here, once again at GPT, our probability of success is 93%. And this is calculating Greeks, this is calculating IV, volume, everything. Because I feed my GPT a lot of data, not only this, daily data for options, so we can calculate the probability of success for each trade. And then if you look at the max loss, is not the $10,500 that I'm using in margin, but actually it is way less than that. Usually around 30%, 20%, sometimes even 15%, depending on the difference of the strikes. So the spread between the strikes, we can make the maximum loss higher or shorter. So you can see that little by little, you're going to be building that capital, adding each and every day. So you think 0.3% doesn't make sense. But look, the copy trading usually goes for 18%, 20, 30%, and projected, it made over 87% in less than a year. So imagine what you can do if you just boost a little bit more these returns to 0.30 to 0.20% as we're doing right here. So hopefully you enjoyed this video. Hopefully it gave you a lot of insights, and hopefully also Bitopics releases the internal builder where you can build this strategy beforehand and see everything without having to use GPT or any other tool, and you're able to do everything just in-house. So thank you very much for watching. I hope this was a very insightful video, and I'll see you guys on Friday for another one. Peace.